My name is Rick Bloodworth. This is the Common Sense Christian Financial Channel. Today is Sunday, January the 18th, and today we're going to be talking about the state of the silver market, some of the things that have happened this past week. If you watched yesterday's videos, there's going to be some repeat on that because I think the information that we're going to be looking at is vital for us to understand. And so if you watched yesterday's video, I apologize for the little bit of repetition, but I think hopefully you can see the reason that we need to talk about these things. Also, I wanted to look at where the market was last week, what it did as far as breaking out of a range it had been in for a couple of weeks, and also where we might be expecting to go next week. And so there's a lot to cover. I wanted to start off with the market from last week. If you will recall, last week, I believe it was the 9th of January, it was a Friday, we're talking about a week ago, the market closed at just about $80. It was an all-time record weekly closing high that Friday, January the 9th. And then on Monday, January the 12th, this past Monday, we broke out of a range we had been in ever since December the 29th. If you'll recall, December the 29th, we had a $14 spread, and we stayed within that range for about 2 weeks. Well, it finally broke out of that range. I say finally, but 2 weeks is a lifetime in our current market. On Monday, we broke out of that range. We closed above that 83.96 resistance point at a little over $85 an ounce, an all-time record closing high. And then the next day, we actually tested this 83.96 mark. It dipped down maybe 50 cents below that mark, but it was just there for a little bit. It shot back up, and we had a close that was closer to $87 an ounce, an all-time record closing high on Tuesday the 13th. And then on Wednesday, we had quite a move. We went all the way up and touched $93.64. I believe that's correct. Wednesday's reporting by Kitco, which is where I get the spot prices from, was a little bit inaccurate. And so it may not have gotten all the way to 93.64 that day, but that was what it showed for the high that day in the overnight markets. And so I'm going to go with that. But again, we set an all-time record closing high for a day. And the next day, we had a very similar pattern. We had about the same range. Both of them were pretty good move within that, probably about, $7, $8 an ounce. And it started off, it hit the same high, if my figures were correct. And I think it was $93.10 an ounce is where it closed on Thursday. And so we had a lower closing that day. And then the next day, yesterday, Friday the 16th, we closed a little bit lower than that. I believe it closed at $90.04, which was certainly lower than the two previous days, but still an all-time record weekly closing high of $90 and a full $10 higher than the last previous weekly closing high. So it was quite a week. I pointed out just a couple of days ago, we appear to be in a little bit of a channel again. Don't know if it's going to last very long, but it has tested the top of this the very next day. It's gone down closer to the bottom, but never touched the bottom again since Tuesday. And so whether or not this range holds or not, don't really know, but it does give us, it gives me anyway, some important parameters to look at. If it closes with conviction over 93.64, I wouldn't be surprised at all if it goes all the way up to 100 very shortly after that. But if it closes with conviction below this $84 mark and it stays there for a couple of days, well, we could be having a little bit of a pullback or even something more significant than that. So we're in a little bit of a channel right now. Keep an eye on that. Draw your own conclusions as to what that means. But again, a great week. $90 for the closing. We've never seen anything like it. Will it continue to go on in this bull market? Well, it certainly could. Bull markets are an interesting beast, aren't they? But that's where we've been this last week. And I just thought I would show you that to begin the video. And I also wanted to talk about some news that I thought was really critical, especially to those of us who are stackers, those of us who not only stack, but who also like to take profit every once in a while. Some people in the stacking community have no desire to take profit. I'm not really sure why they get so excited about price movement if they're just going to keep what they have. But everybody's got a natural tendency to kind of keep score, and you can see your net worth going up, and that is exciting, and it does give you a little justification for your decision to stack in the first place. But again, if you never intend on selling it, all you're doing is accumulating ounces. Nothing wrong with that, but a little bit different mindset than somebody who's, say, investing in the market in addition to stacking. I do both. I've used silver as an insurance and a savings vehicle for quite a number of years, but I've also taken a small portion of that and used it as an investment account where I will buy and sell within that account and do so on a fairly frequent basis. And so the news that was in prominence last week really affected people like me because there were several factors that can limit the amount of money that we can get for our silver right now. On Monday, Treasury Secretary Bessent met with his counterparts from the G7 nations, and they were talking about the difficulty, some of the problems that we've got in our supply chains. And they were trying to figure out a combined strategy as how to address these problems with some critical minerals, some strategic minerals and metals, of course, of which silver is included. Well, after they broke from their meeting on Monday, the Chicago Mercantile Exchange announced a considerable raising of several of their margins on the commodity market. They went from a dollar amount to a notional amount for the silver market and some of the others, but on the silver market, they went to a 9% margin for whatever silver was at any given time. And so if you've got $100 silver for a 5,000 ounce contract, that's $500,000 worth of silver. 9% of that would be a $45,000 margin. So that gives you an idea of how difficult it's going to be for some of the players within this market to go long or short, either direction. But it was some of the events that occurred after this meeting, in addition to the CME's announcement, that kind of have affected some of us. On Tuesday, a number of the small dealers and the bigger dealers, those who purchase silver from the public and who sell silver to the public, woke up to the news that the major refineries around the nation were starting to change the way they did business. One of the things that they were going to do was they were going to no longer give the dealers the spot price the day they brought it in. What they were going to have to do is they were going to have to wait for a while before the silver could be refined, and then they could get the spot of whatever it was the day they refined it. Now, if they wanted to get the money that day, the cash that day, for example, the 999 silver, which had been in such heavy demand by the refineries, they were now going to be paying $15 back of spot. And you just think about what that would do to a dealer. There was one dealer in Florida that mentioned he had purchased about 15,000 ounces of 999 silver over the weekend and over Monday, and now he's hearing that if he wants to get an immediate payment from the refinery, that he's going to get $15 less than spot. Well, that can wipe people out. And if they have to wait to get spot, well, there's no telling what spot will be 2 months in the future. And so that really started to change the way some of our local coin shops do business. And so there was another one, Harry's Coin Shop in Oregon, who I really like, who I've also done business with, and he had mentioned the same thing. Even though Florida and Oregon are obviously on opposite coasts, they deal with the same national refinery. And he had the same thing. The refinery said they could only give him $15 back of spot for 999 silver. And then with all this information going on back and forth, I started to get a little concerned. I sold some of my 90% on Tuesday, not a big amount, but then as the week went along, I kept hearing more and more information that was starting to act as if there might be a tremendous backup within the retail side, especially for the small guy like you and me who want to sell it. As a matter of fact, on Friday, I decided I'm going to get rid of a portion of my 90% silver, about 10% of it, as a matter of fact. And so I called up my local dealer, Tom Stout. Tom and Brett Stout run Stout Safe Storage in Amarillo. And I just sold it to them on Tuesday for $8.50 under spot, which was a little bit of a hit. It was definitely less than they paid just a couple of weeks ago, but it was more than I could get from anybody else, except for the one in Florida, but they weren't buying any 90%. So I got a fairly decent price, still $8.50 behind spot on Tuesday, but when I called on Friday, Tom mentioned he had been to the refinery on Thursday and found out that their processing was way backed up and that they couldn't expect to be paid for a while. Well, this involved hundreds of thousands of dollars that's now tied up until the refineries can catch up. And so when I talked to him on Friday, he was trying to figure out what he needed to be setting his margin at. And so I just told him, don't worry about it. Tom's a good friend. I didn't want to put him in any more of a bind than he already was. But indeed, he called back a little bit later and was ready to give me a quote. And in fact, I had sold it to JM Bullion for $12 under spot, $3.50 under what I had been able to sell it for on Tuesday. And that was really the best price I could find in the country at that time. So you can see that there is starting to be somewhat of a almost impossible situation. It's impossible for the dealers whose livelihoods depend on them being able to have a liquid silver market, and it becomes very difficult for the ones who are investing in silver who are used to selling that silver. And so you can see that this segment of the market is really kind of jammed up right now. Where it will go in the future, nobody knows, but I did end up selling about 10% of my 90% stack in order to free up a little bit of capital and wait until the dust clears a little bit. I'm hoping that turns out to be a bad decision. I'm hoping a year from now or 2 months from now that my remaining 90% silver is worth a lot more. That will mean, hopefully, that the market is starting to function a little bit more normally. But either way, I feel pretty good about that, and I'm able to have a little bit of my powder dry in case I find some good deals in the interim. So these are some of the things that have been going on in the news. They're quite significant. These are certainly once in a generation type of circumstances. We didn't see this in 2011. If you'll recall, when silver went up to $50 in 2011, it was just there for just a little bit of time. It was only over $40 maybe for 2 weeks in 2011. That did not allow the refineries to get very backed up before it just broke down completely and was back in the 20s before you knew it. In 1980, the refineries were backed up, similar to what they are now. But again, the COMEX changed the rules on the way that you can invest, and that caused the market to come down significantly. The $50 mark that everybody talks about from 1980 was only there for a couple of hours. I think it closed well down into the 40s that day, and just within a few weeks it was down significantly lower than that. And so this is a new paradigm, a new age for silver, and most people have never seen anything remotely like this. So it's something to keep your eye on. I think that we need to use a little bit of caution as we go through this. I can tell you that in the future, in the near future, that I'm going to be very reluctant to buy anything that is not considerably below spot. That means I'm going to have to look for good deals on eBay and actually find them in order to get anything like that. Until then, I'm content just to sit tight with my 90% silver and the rest of my stack that's in 999 form. But it's just something for each one of us to be thinking about. If we've made some certain types of plans based on last week's reality, we may need to step back and consider whether or not those plans are realistic anymore. And so I thought I'd bring this information to you. Hopefully it will be of help. The last thing I wanted to do is share with you some of the premium spreads that I found in these last few days to let you know just exactly where the market has gone. Brian Vermillion was offering to pay $9 below spot for 90%, but he will only take a certain amount of that, and he's not even sure that he can take anything if you were to sell it to him on any given day. So that's not exactly a figure that you can rely on. It's the best a local dealer can do. We understand that. As far as what good it will do you, I'm not sure it will do you any good. SD Bullion was $12 below spot on their 90%. That's 13% below the spot. They'll sell 90% silver at spot right now. So they have a 13% spread between what they'll buy and what they'll sell 90% for. And then JM Bullion, who used to be pretty competitive with some of the others this last 6 months, have kind of changed their model a little bit, and they're not as competitive. Will they get back to that? Who knows? As of this weekend, they were paying $19 below spot for 90%. That's 21% below, and selling it for $4 above spot. And on their site, they only showed a few 90% products that were still in stock, and those had a waiting period before they could send them out. So is that signifying some kind of a tightness within this market, or is it just showing the vast difference between what they're willing to buy 90% for and what they're willing to sell it for? And maybe a little bit of both. But their spread right now on 90% is 25.5%. And that's quite a spread. As far as Eagles go, Vermillion will give you spot for your U.S. Eagles, and they're selling U.S. Eagles at $3 over spot, unless they're impaired, and then they'll sell them for $1 over spot, even though they'll still give you spot price for it. So just about a 3% range at Vermillion Enterprises in Tampa, Florida. Your problem if you sell anything to them is they will not lock in the price if you're doing it by mail. They have to get to them, they have to process them, and then they'll offer you spot for whatever time that they finally get it processed. And so that's something to keep in mind. However, you can order over the phone and get it for $3 over spot. They will lock that in as long as you wire them the funds, and they'll send it out immediately. So that's not a bad price, $3 an ounce over spot for Eagles. That's at Vermillion Enterprises. SD Bullion is right now paying $4 under spot, 4.5% under spot for Eagles. They're selling it for $9.50 over spot, or 10.5% over spot. And so they have a 15% spread on their Eagles. JM Bullion is buying Eagles for $8 under spot, selling it for $12 over spot for a 22% spread. Again, a fairly healthy spread. And then generic silver is where it becomes even more uncertain. Brian Vermillion in Florida will sell you generic silver for $1 under spot, $9.99 silver, $1 under spot, same terms as their Eagles, but they're not giving any bid right now on $9.99, so they really aren't buying anything right now. And maybe it's got something to do with buying 15,000 ounces last week that they haven't been able to unwind. SD Bullion is paying $7 below spot for $9.99. They're selling it for $5 above spot. That's a 14% spread. And then JM Bullion is buying $9.99 for $11 under spot, selling it at $6.50 over spot for a 19% spread. And so that gives you an idea of what the dealers are advertising today, as of Saturday, for the products that they're selling. Hopefully that will give you an idea if you're intending to continue to invest, especially if you're dollar cost averaging. You can compare that to what your local coin dealer is willing to buy or sell for and see what makes the most sense for you right now. But hopefully that information will give you a little bit to think about, a little bit to make plans with in a more prudent way. So just be taking all that into consideration. I would really be acting with tremendous caution in this particular market. We've been going up so fast. We've been setting new weekly highs every week. We're at $90 an ounce right now. Don't be disappointed if you're having to get less than $90 for your silver. If you bought it at $30 an ounce or so, you're still making a very nice profit. And if you need to sell, isn't it nice to be selling at that kind of a profit? Why, you may even have a tax burden on top of that. So that's the information for today. That's the video. I hope it will help you in some way. But if you have comments, please share them. I certainly appreciate those of you who've been commenting. There's been a lot of good information in that forum. Please continue to do that. Thank you for those of you who have watched, certainly, and for those of you who have subscribed. I really appreciate that. We'll see you hopefully in the next day or two. Take care, and God bless.